There are three names in the tech space that look ripe for an even bigger rally. Maybe there's an alt-MAGA trade out there. Let's go off the charts with Rob Sluymer of Fundstrat Global Advisors at the Plasma.
Does he have a hat too?
He hasn't come over yet to the desk.
No, his own hat. Maybe he's got an alt.
Oh, I don't know. Rob, take it away.
I have no hat, but I have charts, so we'll start with there. I have to fully agree with Dan. If you think about the progression of the market correction, incrementally, week after week, we saw groups starting to roll over. With leadership often the last one to fall over, technology had its big hit. We can see that obviously coming down around the 200-day. It's not a specific support level, it's a support range, and we're starting to see the S&P 500 technology sector start to bottom out. All the short-term data was depressed. We're getting that oversold bounce. So as Tim had pointed out, we're up 5, 6, 7 days in a row. But what was notable coming into the end of last week, beginning of this week, and what we put in our note on Tuesday morning, the tech stocks really lagged. They really didn't start to generate any upside momentum until the last couple of days. So our call was that as the market's going to rebound, we do think we're getting a year-end rally. Tech is going to lead that rally. The participants are going to go back to the existing growth leadership. What I think is critical and what we have to be watching as we go forwards is this relative performance line right here. That's the technology sector versus the S&P 500. We don't want to see new relative lows. That would be a concerning sign for us that tech is not going to be rebounding. But we think from here into year-end, tech continues to lead. So let's look at a couple of bellwethers that have had big corrections. Microsoft, obviously right back to the 200-day here, is an important rebound. Now, it rallied very strongly today, up 4 or 5%. But what's critical, at least from my perspective, is that relative performance trend all the way through the correction held in. So I think this continues to be a core long-term holding, at least until that relative performance decays. And I think it's showing evidence that it is going to lead into year-end. Now let's look at Apple. It was one of the last of the big caps to correct very sharply, but close enough to the 200-day moving average that I think that correction's done. And when we look at that relative performance trend, again, still higher highs. I'm assuming this is going to be a low. You have higher lows all the way through. That trend is still intact. Apple is still viable at current levels, particularly for a year-end recovery. And then lastly, the semis have been a very difficult area to look at. We talked about Applied Materials a couple of weeks ago as putting in a peak at the beginning of 2018, but incrementally they're starting to improve. I think they are the trade into year-end as well. When we look at Intel, again, we had lower lows coming into last week's lows, but that relative performance began to firm up. You started to see higher relative lows. And despite being right underneath the 200-day moving average, I think it has more upside. So if you're looking for laggards, you don't want to buy the names that ran like scalded cats today. Look at Intel as a laggard.
All right, Rob's going to come on over. Rob, we got so many questions, especially because he's not endorsing half of MAGA, and he's throwing Intel in there. But first, Rob,
Miyaga, maybe.
Miyaga,
or Miyagi, obviously.
I don't know. First, I want to ask you about today's rally and whether or not, because we're back to early October levels. So is it like October never happened, or was there damage done to the markets that we still have to actually? Excuse me. Before we do that, we're going to take a look at Jeff Sessions, who is walking out of the Justice Department. There he is, to a round of applause. This as he submitted his resignation letter to the president earlier today at the request of the president, according to his letter. But you see the staff there applauding Mr. Sessions as he is making his way out of the Justice Department on this day. Steve, what do you think of his replacement, what this could mean for the investigation?
This is something where when you look at what's been going on with the Trump presidency, this has been a thorn in President Trump's side. And without him, I mean, President Trump has wanted to get rid of him for quite some time, wanted to wait till after the speed bump of the midterm elections. Now he's sort of got freedom to do a bunch of things that he wants to do and get on with his own choices. He was disappointed by Jeff Sessions, and hopefully for the country, maybe he can move forward a little bit better.
Okay, never mind.
We want to move on here, but again, Jeff Sessions leaving the Justice Department. But I'm sorry to interrupt, but in terms of the damage that we saw in October,
right. So
did it happen?
The uptrend for the market itself, the S&P 500, and even the Russell 2000, you could argue, are still intact. We see more damage in a lot of the foreign markets than we do in the U.S. At the sector level, there's a lot of damage done, particularly in the cyclicals. So our view here is we're getting a year in recovery. We've talked about this before. We think that the market cycle, the low that began in 2016, we're already 3.5 or 3 years into that market cycle. The fourth year is 2019. We're concerned about it. So we think this is a trading rally into year end, and then we're going to see more divergences developing, particularly in the cyclical side. So tech has been leadership. It often breaks right at the end of the correction. We're getting the rebound. That's one area you want to be concentrating to capitalize on this bounce into year end.
Do you not like Dan's MAGA?
I think
you only liked you only liked the Ma in MAGA.
One of the reasons why we came up with a really good acronym for those 4 letters was that Facebook was not particularly important once it lost a few $100 million, and Netflix was never particularly important. And these 4 stocks that made up almost $4 trillion in market cap were really driving most of the performance of all the U.S. indices.
100%.
Yeah.
And in fact, if you look at Microsoft, Adobe, CRM, Google, Apple, what else was I missing? Amazon. They have all corrected down to levels. They were all in our note on Tuesday, coincidentally enough. They've all collapsed. I think you've seen a washout on the technology trade. It rebounds. It leads the market higher into year end.
Rob, thank you. Rob Sluymer of Fundstrat. Just quickly, Karen, Facebook, a real underperformer in today's market. Trump, during his press conference, did say he wanted to work with Democrats to regulate social media companies. Do you think it's going to feel the brunt of something?
I mean, it's definitely been, the problem, the poster child. I think eventually that'll fade, but it was disappointing, no question, particularly at Google up, nearly 4%. A lot of the similar issues, right? I don't know why it was so bad, actually. I am.
I've actually written a couple op-eds about Facebook.
On CNBC.com, I'm sure.